India rupee hits all-time low. Rupee crashes to all-time low. Implications for India's economy. The Indian rupee hit a record low against a surging US dollar as investors anticipate a boost to the American economy from Donald Trump's policies. Despite interventions by the Reserve Bank of India, the rupee weakened further, fueled by foreign investors pulling money out of Indian stocks. The Indian rupee hit a record low against the US dollar on Wednesday, 6 November. It dropped to 84.28 rupees per dollar. This happened because the US dollar is getting stronger, and it's at its highest point in 4 months. Also, Donald Trump winning the US presidency is making people think the dollar will get even stronger because of his policies. The Indian rupee took a big hit today, dropping by 17 paise. That's the biggest drop in 4 months. It even went as low as 84 rupees and 33 paise per dollar before ending the day at 84.295 rupees, according to the Financial Express. Forex dealers are saying it might drop even more in the next few days, maybe even reaching 84 rupees and 40 paise. Tough times for the rupee. The rupee hit a record low, but it's doing better than other Asian currencies. This is because the Reserve Bank of India, RBI, has been stepping in to keep it from falling too far. However, experts say that while the RBI's actions can help smooth things out, they won't change the overall trend of the rupee getting weaker as the dollar gets stronger worldwide. US 10-year Treasury yields also shot up, increasing by 17 basis points to a 4-month high of 4.44%. This put even more pressure on the rupee. People in the market think this increase is because Trump might come back with policies that favor anti-dumping duties and tariffs. These policies could cause inflation and might slow down rate cuts by the US Federal Reserve. This would lead to higher yields and a stronger dollar. Trump's tough stance on tariffs and his track record of spending big could cause inflation to come back in the US. This might force the US to raise interest rates and make the dollar stronger, which would be bad news for the Indian rupee. The Reserve Bank of India, RBI, is anticipated to maintain a conservative stance towards market intervention, prioritizing the mitigation of volatility over attempts to influence the rupee's trajectory. The outlook for the rupee is further complicated by apprehensions among importers, who are preparing for additional depreciation. This has resulted in a substantial sell-off within the market. The potential fiscal policies of a Trump administration could lead to a rise in US Treasury yields. This would make dollar-denominated assets more attractive to investors, thereby increasing demand for the dollar. However, market participants caution that a sustained strong dollar could put pressure on emerging markets. This is because investors might shift their focus to dollar-backed assets, potentially leading to outflows from domestic equity markets in these emerging economies.